G'day everyone, Lee here from Martinuzzi Property Group with my weekly market update. And this week I want to discuss the quarterly market results across the country and locally here as well. So the last quarter, September quarter, has just passed, and very much a slower pace in the real estate market here locally compared to what we experienced in the first two quarters of the year. So I'm going to go through. It's going to be a little bit longer than normal, so I do apologize. If you'd prefer to read our blog, please do check it out at martinuzzi.com. You can subscribe to our newsletters, but the blog link's here below as well. And we do have our quarterly market newsletter coming out in the next few days as well. So if you subscribe, you'll get an email from us with that newsletter and all the information about the market in that as well. Just on a side note too, guys, you may have seen already our property management company, Lulu Live, for this month up until the end of October, we are offering 3 months property management free. So if you've got an investment property that's currently self-managed perhaps, or perhaps you're looking for a more unique experience and a higher level of service, give us a call. We'd love to speak to you about our services and offer you that 3 months property management free. And that's only for the next 10 customers up until the end of the month anyway. So if that's you guys, I would love to hear from you. Now let's look at the property market across Australia first of all. So nationally, annual property dwelling increases are still up only slightly by 1.7%. So that is declining, and that declined quite a bit since last quarter. And that's really because this quarter, the September quarter, we've seen property prices across Australia decline, not at a massive rate, but certainly at a rate significant enough to affect that national figure. So combined capital cities, we've seen dwelling prices decrease by 4.3%. And for regional areas, that number is around 3.6%. So that's over that 3-month period. Now, here on the Sunshine Coast, I don't have the exact figures, but I expect it to be somewhere around that 3.6 to 4.5% of dwelling prices decreasing. So my take on it is that it's not really that property prices are decreasing as such. It's more so that we don't have that inflated prices that was due to that severe competition that we were experiencing last year and all the way through, at least here on the Sunshine Coast, until about May. So when you have that additional competition, if market value is here, that competition pushes it up to here. So what I feel now, because buyer demand has subsided slightly, we don't have that level of competition, and that's why prices aren't pushing up. But prices are still very high and quite unaffordable for many people. And I think the property prices will continue to increase after this short period of uncertainty. And there's a number of reasons why we've seen buyer numbers slow over the last quarter. And the first and foremost obvious reason is the cash rate increase. So the cash rate increased again this week by 25 basis points, and it's now sitting at 2.6%. So that means your interest rates and your mortgage repayments are all going up. So you're looking at the average variable rate of anywhere from probably 3.5% if you're lucky, but more realistically around the 4.5 to 5.5% for interest rates. So that certainly increases your costs of living. However, consumer spending is still up. We've seen inflation rise from August to September to 7%. So inflation is still increasing, and that's why the RBA is trying to control that by increasing that cash rate. So inflation, consumer spending, all still very up, and the economy seems still quite buoyant on all accounts. So it'll be interesting to see what happens in the next 6 months. Now, on one note, if we look at the combined capital cities, in September, dwelling prices fell by 1.4%. So that's starting to have a little bit of a rebound now, because we started to see in August dwelling prices decline by 1.6. So maybe it's too early to predict, but perhaps we have actually seen the bottom of the market. And that's particularly in those larger cities of Sydney and Melbourne, where we see a decline sooner than what we see up here in Queensland. So over the next 6 to 12 months, we might still have a fairly slow moving market with prices now sort of bottoming out. But I expect through to next year, or the end of next year, we'll start to see prices incline again as well. Total listings on the market are up on this time last year. So total listings across Australia are up 7%. Now, if we look at that, it's really due to the fact that there's a number of listings coming to the market, and the number of sales aren't happening to what we had last year. So sales are actually down across the country by about 12%. So that means there's more properties coming to the market and sitting there for longer, making that total amount of listings on the market higher than this time last year, which obviously we're in the boom market as well. However, the 5-year average, we're still 15% lower than the 5-year average of total properties on the market, and total sales are still up 6.5% on the 5-year average as well. So things seem to be quite positive there over the longer term as well. And as we know, property prices will always climb. Let's have a look a little bit more locally here now. Now, these figures are provided to me by realestate.com, and it's saying that Palmwood's annual property price increase is still up at 29%, and Woombye a little bit lower at about 27%. Now, I expect these figures are actually lagging a little bit, and I would expect them to be closer to around that 10 to 15% more realistically. The median house price in Palmwoods at the moment is $870,000, with Woombye sitting around $845,000. Time on the market, about 24 days on average in Palmwoods and 34 days in Woombye. And we are seeing a shorter number of properties coming to the market, but I expect that will start to increase now as we enter into spring, assuming we can get some more sunny days, of course, and leave this winter behind us. But it seems to be carrying on a little bit, and that's delaying the spring selling season, not only locally, but across Australia as well. So, guys, that's my update at the moment. If you'd like any information, if you've got a mortgage or looking to purchase, it's important to understand how that cash rate rise will affect you. That might mean reassessing your borrowing capacity, or even doing some refinancing. So give us a call. I can put you in touch with some lead brokers here on the Sunshine Coast. For all your property needs, if you're looking to buy, guys, do keep in touch with us. We've got a bunch of new properties coming to the market soon, and a bunch of new properties on the books as well. So we'd love to help you with your search. Give us a call. That service is certainly there. And for those out there that are thinking of selling sometime in the next 3, 6, 12 months, get in touch. We'd love to come around and have a coffee and give you some advice on what to do next with regards to your movements. Guys, that's my update this week. Hope you have a great week. This is Leigh from MPG with you all the way. Talk soon.